Good morning, guys. I hope everybody's doing well. Just thought I'd construct a quick video to discuss where we're positioned across most of our major charts. Finally seeing the breakout in the dollar, which is, long overdue, but we really need to ask ourselves the question now, is this the breakout or is it just a slight move to the upside like we saw back at the start of January? And here we're seeing a very similar pattern form where we are seeing an additional cycle. Price did break out of 1990 resistance, and if you move to a smaller time frame, you will see that price, had, even a 4-hour, price had just been messing around before this sort of 1990 region for quite some time. So it's great to see we broke out. In terms of setup wise, there was a core setup yesterday above 1990. You can see we had move here, 100-point move, pull back into the moving average after recent crossovers. At this point, price is above 20 moving average, above our resistance level, and in terms of pip value, it's a 100-point move for about 30-40 pips worth of risk. So fantastic risk to reward ratio there. Where we're at now, price is at 92 resistance. So with the dollar index, with euro, we know price can be attracted and respect key levels, especially round numbers. So it's very important to understand what the next level may be, and it won't always go up in order. So 92, 93, 94. Our next level might be at 94 up in here, and I'll just draw this roughly for you. Just draw it for the zone in here. Somewhere in and around here, as you can see, that would probably be my next area of interest. So should we see a break of 92, you've got 94 in sight. Just to move again back up to the higher time frame on a weekly chart, this is a weekly phase 2, and it's quite clear to see that. You can see the market crossed over, strong move to the downside, pull back into the sort of summer, back end of 2020, further move to the downside, back into phase 2. What we really need to take into consideration here, and it's what I say to all of us when we're analyzing our trend, our phase, and identifying where price may be, is understand the strength of each move. So you can see at the start of the move lower, we did see strong selling taking place, phase 2 pullback as expected. We see another strong selling move, and then during this phase 2, it's been quite a battle, in fact, and you can see it's more than just a phase 2 here. This week has been incredibly strong. We are back at 92 resistance, as you can see, previous support back end of last year, but you've actually got highs and lows within this move. So looking at this briefly here, we can see that we've got a low, we've got a high. So in fact, that's a lower high in a weekly downtrend. Lower high failed to complete. This move in here itself, of course, failed to make a new lower low. So at the back end of last week, we did have confirmation of a weekly break in trend, and it's quite obvious that now we are seeing that push to the upside. So I think start to practice using the higher time frames, guys, and understand where price is and where price is positioned. But there's your higher low formation in the weekly. So after the close of the bar on Friday, we had the idea that price was not going to continue moving to the downside. Of course, we understand that the market can be volatile. We had Powell speaking last night. There has been a lot of key news and influencing factors that can put price out of position, but I think today is definitely the move that we needed to confirm that pushback higher. So as it stands, we're no longer in a weekly downtrend. This last 2 weeks has been incredibly strong. If you think it's a 240-point move, and it pretty much breaks a lot of the recent action. So almost 7 weeks worth of selling has been counteracted by just 2 weeks of buying. So take that into consideration, guys. It is non-farm payroll, so again, we can expect a wild afternoon. Don't dive into any positions sort of before the lunchtime period. I've lost my pen now. 1 second. Brilliant. So we're back at again 92. Sorry, guys, just froze then. Again, don't dive into any positions too quickly. If you are looking for a move, it will have to be a bounce back off 92 for an extended push higher. Non-farm payroll, we know the market can move. It can swing 100 points very, very quickly. So just be careful if you are entering. But I hope that we do see a continuation on the back of non-farm payroll. Dollar continues moving higher. It would be great to start next week as a continuation trader of the dollar. So buying the dollar across the board. Just to move into euro, of course, euro's in a very, very similar position. I have taken a lot of key levels off here, but 120 break was very important for us to see. Price is now trading lower than... lower than 120. Let's just draw that in for you guys. So again, use that as your mark now. Should price move back above 120, again, it will cancel all opportunities to sell. Just to show you a weekly time frame, we're seeing a very, very similar pattern to obviously the flip side of what the dollar's showing. If we're looking in terms of trend, yes, we are still in an uptrend. What I don't like, in fact, is this low that was created here. Wasn't quite a confirmed low, in fact. As we took out a new high here. Bear with me one moment. Yeah, in fact, we have got position here. So this will eventually, once price breaks and we do see another weekly candle, this will counteract. It will no longer be in a weekly uptrend. It will be a move to the downside, which is great because if we see higher time frame changing direction, changing trends, again, we're going to fill our boots up with multiple opportunities across the smaller time frame. So if you're a daily trader, you may already be in this. Definitely nice break and retest at 22.50 in here. Big, strong seller's candle throwing price back down. Since that move, price has dropped over 200 points. Daily traders may want to look for a lower high formation back off 120 and use the 200 moving average as a first target. Any smaller intraday time frame traders, well done for anyone that's been taking calls. There has been lots of call bounces on euro. We know the market's volatile. We know the market's nuts. So again, just be nice and decisive. If you're in profit and happy with the profit you're in, just take it off the table. If you are looking for a longer term move, get yourself to risk free. We know the market's been volatile. It's been a wild couple of weeks. Price action yesterday was awful. I actually wasn't trading yesterday, but I caught up this morning and price action was disgusting. So we're now starting to see a breakout. So again, be patient. Look for pullbacks. Look for continuations. Once you have an idea as to where our major currencies are going, so if we have a bias to sell euro, that's euro weakness, go and look for a strong currency to match up with euro, and that's how you can trade your cross currencies in the same direction. Pound's been brilliant. We did see a lower high formation back off 140. Anyone that took this move, we have been calling this for quite some time. Now I just want to show you the weekly chart because price did move back under 140, but 142 was the real area for aggressive limit order trading. So 142 is weekly support. 142 is weekly support. Bear with me, it keeps moving. And if you see as you move back, 2018, price rejected 142 again. You've got 142 in here, 142 in here. So it's quite a significant level for pound. Previously always been above, but we did see strong rejection push lower. Nice little bounce, creating a lower high formation here off of 140, and 137 being this recent congested area is the next target. So how do we get in this? If you're not in this already from the break of the 4-hour retest here of 140, again, if you did take that, that's 100 points at risk, and you're nearly at a 1-to-1, so well done. The fact that prices burst through the 4-hour 200 moving average is quite a significant factor. It is showing that price is trying to change from a long-term trend perspective. It will need to close for us to confirm it. Just like we saw across on all of our 4-hour core bounces most recently in the uptrend, we've seen that cross, and I will be looking for continuations down. Of course, first intraday target is 137. To be a seller of this market today, again, it would have been great if you was in up here on the bounce. Just look for pullbacks. Probably won't get a 1-hour pullback as the market does look incredibly weak, but just like we saw a couple of hours ago, 15-minute bounce off the 20 moving average is perfect to look for that move and continue that move to the downside. As I said, guys, if you know pound's showing weakness, start to look at your pound cross pairs. What's pound CAD doing? What's pound Kiwi doing? What's pound yen doing? So we know that Aussie and Kiwi have been weak as well, so those markets are moving to the upside. Pound Swissy also, you can see that pound Swiss is breaking down. These are obviously very, very early trades against the current trend. So we're expecting a daily phase 2. Daily phase 2, we're looking for a minimum of 3 bars. These markets obviously have 24 bars inside one day. So we're just looking for cycles, lower high formations to keep price pushing down and obviously follow these moves as trend continuations. But again, pound weakness is very, very clear to us this morning. Aussie, again, we're back at 76.80. Really good moves. I mean, this was an area that I highlighted to you guys at the start of last week. Price does, out of interest, move back into recent levels, recent zones, and previous high and low areas that we can use as our potential targets, but also areas to take trades from. So looking at Aussie here, I mean, this is pretty much a very, very messy, not ideal head and shoulders pattern, but we are seeing a lower high looking to confirm itself very shortly. It will be confirmed at the high of today. So this, in fact, does look great. We're now below support again, 200 moving average being the first daily target. So we've got quite some room to move into. And if you look at just this area of interest that I showed you previously, price rejected these highs, failed to meet these highs, and then most recently we've got a strong push lower, pullback, rejection of the high area, bit of mess moving around, and then strong solid move to the downside, 76.80 broken. So again, 1 hour pullbacks, guys, continue to move. Course set up 3 hours ago. Anything that when the price continues, look for 15-minute bounces. If not, bounce back in here and off we go. Kiwi again for me has remained relatively strong. We haven't seen much movement, and if you look at this area in here, that is not exciting to trade. We're not trading anything of interest in this area. So dollar pushing higher, Aussie down, Kiwi down. I just want to show you the S&P as well, because we said to you guys, if price fails to stay above 39, it's quite a significant factor that where Aussie has been correlated with S&P, and we have seen those two, or Aussie, be dragged by the equity market. Equities breaking down, obviously helping Aussie break down too, and Kiwi following suit. So that being said, again, any intraday traders will have good luck trading these moves to the downside. So just continuing following trend, following direction. We've been lacking direction and trend for quite some time, so don't avoid it. When the market's moving, take advantage. You've got multiple time frames to look for pullbacks to get yourself in and out on, so don't just sit there watching it run away from you. Have a plan of action to get yourself in. Dollar CAD, again, something I've been saying for quite some time. I have been looking to be a buyer of dollar CAD, but as you can see, price action's been awful. Lots of wicks, lots of spikes. This just shows a real strong battle between buyers and sellers. What I am seeing here is we're trying to form a higher low formation. But ideally, yes, you've probably got a 100-point move in here, but I would like to see a price break above 27.70. We saw lots of interaction recently from here. So if we're above, we do see higher confidence in taking these positions. Price on an hourly time frame, again, yes, we're seeing a push higher. It needs a little bit more for me to commit. Perhaps if I see an hourly bounce and progressive buyers step back in anywhere in here, so we've got a couple of higher lows in play, that may attract me slightly quicker than expected. But again, strong break above 27.70, big buyers take control, and again, off we go. Obviously, non-farm payroll today, so we do ideally want you guys to stay out the market. It can be wild. I don't actually know anybody that can trade NFP successfully long term. You may have a couple lucky spins, but it's too volatile. I mean, look, sometimes it can move and we could see a 10, 20-point range and we think, wow, all of this excitement for nothing. I've seen non-farm payroll, especially a few years ago, move up and down for 2-3 hours, just 100-point swings each time. So you end up getting triggered in, stopped out, moves back up, and it's just far too difficult. As traders, we really want to simplify our trading and make life as easy as possible. So getting yourself caught up in real volatile markets is not ideal, especially on a Friday. It's time to wind down, have a beer, and obviously plan ahead for next week. So as long as you're getting your direction correct, you've won half the battle. If you feel like you're breaking even, which a couple of the guys I spoke to yesterday are, winning one, losing one, winning one, losing one. If you're getting the direction correct, this is what we can work on. You're losing trades, we're always going to find an area or somewhere where we can tweak a few things. So as long as you're getting the direction correct, you're winning half the battle. Leave it to us to tell you what to do next. Dollar Swissy, again, it's a shame we didn't really get a pullback here. I mean, a beautiful uptrend is starting, as you can see, crossover, market cycling, price breaking above 92. If I'll just take you up to a weekly chart, 92 is a very strong area. As you can see in here, it's recently been strong support, strong resistance. It's been an area of interaction for quite some time. For those of you that trade pivots, it had been meeting S3 on certain time frame, R3, sorry, on certain time frames. There's monthly pivots tied in as well. So we're now heavily overextended. What do we do now? If the dollar does continue and we are seeing a break of trend, break of pattern, then I do expect a continuation here. Being a daily time frame is not ideal, or a daily time frame trader is not ideal. We're far too overextended. If you're looking to continue the move, just use your 1 hour charts and look for bounces, as you can see. Bounce off the 20, bounce off the 20. And again, usually on dollar Swiss, you'll probably have a 20-25 pip stop loss, which means you can go and hunt for 20-25 pips, and you don't need to overexpose yourself to the market. When you're trading a daily time frame, obviously your average stop's going to be about 80 to 120 points on dollar Swiss. So naturally, you want to target that. Being so high in the daily phase one, it's quite unlikely that we're going to extend another 120 pips before pulling back. So I want you guys to manage all time frames. I probably think after non-farm payroll, we'll see a blow off. So it might be a 4 hour pullback. If price does move back into 92, we'll be flying. Dive in, take a position long off 92. Dollar yen again, is a very, very similar position. I mean, I spoke to someone yesterday, or sorry, Wednesday, who was quite surprised by dollar yen, but there's nothing to be surprised about because this is a perfect uptrend. This is what we teach, this is what we preach, this is what we show you on charts. And if you haven't got in on this move, make sure next time a market moves this quick, you take full advantage of. So if you're following the pattern of higher highs and higher lows, you're going to know what to expect next. So since the last bounce off the 20 moving average, the market has exceeded over 360 point gain over the space of 8 days. So 8 days to 350 pips up for grabs. When you move down to the smaller time frames, this is just the core strategy, the core bounce that we look for and we enjoy trading. So don't be surprised when price moves back to the 20, you get a bullish bar, take the market back up into the overall direction of trend. So we understand what price is doing here. We know there's direction. Again, we've gone without direction for so long. So take advantage when the market's moving in a direction that you understand. When there are cycles, there is cyclicity, there is strong buyers bars, and so on. For dollar Swiss, dollar yen, understand the market is overextended, so we're due pullbacks. Not a problem. Non-farm payroll may kick things into gear. Monday morning, we may have some great high-low formations to continue pushing this market higher, allowing us to buy at a cheaper price. Use your direction of majors to then help you understand where you should be going with your cross currencies. Quite a lot of you have asked me for my opinion on gold, so I'll cover that. We know on paper, and I do say on paper, that dollar and gold do have a negative correlation, and that is in play as we speak today. Dollar's up, gold's down. These correlations can come and go. These correlations can change. I can also show you examples where both gold and dollar have moved in the same direction. If you look at the market back towards the start of the year, you'll see that. So what do I think now? Well, from a technical perspective, again, weekly's in a downtrend. We've got the 200 in sight. If price can get down to 1600, I'll be surprised if it then goes any lower without a phase 2. So we now need to manage gold as, yes, we're in phase 1. We know the market's never going to continue in a vertical line. It's going to have to pull back at some point. So any intraday traders, keep targets short on the way down. We're due that move. As we start to get phase 2s, we look for lower high formations. I do believe price will move further to the downside first. So 1600 is not a bad target to actually target. It's 100 points away. If we break lower than that, then fair play. Keep that in mind, guys. Equities are moving down. If we look at historical moves within the S&P, apart from this big move here at the start of the year, which is obviously related to the fear driven across Corona kicking in, our phase 2s are pretty much an average size. So start to understand the weight of each pullback of a phase 2, and that will give you an idea as to what to manually manage. I don't think we'll see a correction like this. It's not due, but a phase 2 definitely is due. So even a move down to the daily 200 wouldn't surprise me. It's similar to the recent phase 2s that we've seen. So just use your direction of trend, understand the weight of each phase. So if you're in phase 1, are there strong buyers or are the buyers weak? If there's buyers weak, don't think about buying. Start to dig a little deeper, guys. We're here today. We're here to help. Non-farm payroll isn't a busy day for us, especially after the news announcements released, the figures are released. So if you do need any help, support, or coaching sessions, just get in contact. But again, guys, be confident in your analysis, plan ahead, and we look forward to welcoming you onto the trading floor for tons of events, boot camps, live trading days that we've got planned in the future. We're not too far away, so make sure you speak to the guys about getting yourself booked in when dates are released. Okay, guys, see you all soon. Goodbye.